Without question, it has been a blockbuster month for the financial markets. Asset classes across the board are showing enhanced volatility, largely due to the US dollar's bullish charge. Is this a case of broad-based capitulation, or are investors already positioning for 2024? Hello, I'm Nick Quinn, and this is your weekly markets preview for Monday, 17th of October 2022 from the team here at ForexSignals.com. Thus far, the headliners for this month have been last week's US PPI and CPI. Both numbers came in exceedingly hot. Fresh on the heels of October's better than expected non-farm payroll report, the Federal Reserve now has carte blanche to be hawkish. With September's inflation data firmly in the rearview mirror, we can now turn our attention to the week ahead. So let's dive into the key drivers and events to watch out for in the markets over the coming 5 trading days. So starting with Monday, it is a relatively quiet beginning to the week, and that is very common. We see Mondays to be the lighter sessions. We have got some bond auctions in the US, and that's probably going to be the biggest event of Monday itself. So for it's the front end bonds that are being auctioned off. Now yields have been ticking up, as you can see here. This is the 10-year futures contract, and you can see on a daily chart here, you can see how much those bonds have been stepping down over the past month or so. We're now trading on the bonds. We're now trading at levels not seen since September 2007. So it could be that we've seen some potential rotation in equities and bond markets. So if you just drill this down to a 1-hour chart, I can show you exactly what I mean. Just note here on the 1 hour, look at the way that Friday finished, made such a real marked attempt to get above Thursday's high. Now that potentially, with the CPI prints from last week, that could potentially give us an environment now where we have seen potential support in the bond market and in the equities market as well. So this could potentially give us some rotation now, lowering of yields and rotation back up in the bond markets, and that would bring us back up to this resistance area here at around about 112, something like that. If that doesn't happen, it brings into focus this downside target here, the bottom end of support, and that will be at 109. On Tuesday, we should see a little bit more action in the market, certainly during the European and the London session. We've got the German zoo economic sentiment numbers out for October. We're expecting those to come in slightly worse at minus 65 off the previous 61.9. That gives us a decent look at the DAX. Now you can see the DAX here. This is currently on a 1-hour chart. This is the massive monthly support zone that we had painted in from the last few weeks. We've made 2 very good attempts to get into there, but so far we've still not got any further movement from the bears to push lower than 11,800. Downside target for me on that would be 11,300, but certainly you can see it looks potentially like we're building quite a wide flag structure here on the 1 hour. So that brings into focus these downside targets, the lower end of the flag, and then potentially rotation up into this upper area here, bringing resistance in at 12,800. Now it's back to a diet of inflation data for Wednesday on both sides of the Atlantic, the UK, the EU, and also Canada. So with it being so heavily weighted towards European inflation on Wednesday, that gives us a very good excuse to look at the euro against the pound. Now, currently for us, we've got this massive broadening top. This is a weekly chart that we're looking at here, and we are now pretty much at the late stages of this technical pattern, and we should be looking for some kind of a meaningful break now in the bigger picture. So potentially we're going to move into a very strong trending environment on this particular currency pair. Now this red line that you can see here on the weekly, that's 87.94. That's the middle zone of this initial swing from the broadening top. It's absolutely critical now in these late stages to use that as a line in the sand. So if you take that down to a 1 hour now, we can see just how much the market has tried to make an attempt to get above there and hold it. Currently, as it stands, we've not held it. So if we want to see upside now on the euro against the pound, we absolutely have to get above 87.94. Without it, we will be, I would say, with relative confidence that we'll be rotating to the downside, and that's going to be the bottom end of this broadening top, which comes in around about the 80s, which is a potentially sort of 600-700 pips lower. Moving on to Thursday, we have got some heavyweight data out of the United States, the Philly Fed, and also the existing home sales. And I suspect that it's going to bring in into focus this narrative of global recessionary pressures, particularly with the underperformance of the Philly Fed at the moment. We are expecting a slightly better print, -4.5. from September's -9.9, but it's that US existing home sales data that's going to be absolutely critical. Any sort of like underperformance in that data, and we're going to be looking at the recession word being talked about very much in the media. So let's look at the Dow Jones Industrial Average to just see how that landscape is currently sitting now. As we discussed in the streams during the week, there is no love in Washington for a bearish stock market at the moment, particularly with the placement of where we now go into November with those midterm elections. So from a technical point of view, we are looking for some sort of containment. Now you can see the way on the Dow, and the S&P is not dissimilar, but you can see how this support area from August 2020 has just held price action together, at least for now. So that is really the critical zone for us. This resistance up here sits at around about 31,000 on the Dow, and then to that downside, we're looking to either hold this 28,800 area, or potentially for a slight move rotation down to 28,400. But to be honest, I really feel that there's a good chance that we are going to stay within this containment range now until the elections have been completed in November. And last up for the week, we are focusing on Canada. The retail sales are out, and we're expecting to see some improvement. You know, they're still in negative territory, but we are expecting to see -2 off the previous -2.5. So it's going to be critical from here to see how much this front loading from the Bank of Canada, how much that has had an effect on the retail sales figures. Now, Matt Klim has not changed his dialogue or rhetoric at all over the last few weeks, and as a result, we can see how that has affected the Canadian dollar. Really systemic weakness now in the Canadian dollar. This is a daily chart. So when the dollar CAD is moving upwards, when it's bullish, that's dollar strength, and Canadian dollar weakness as it continues higher. You can see here from Thursday, we really just tried to flash into this upper end of previous support from December 2015, just under that 140 area. Didn't quite make it, but we have made a decent weekly close at 138.97. So I suspect really as we go into the end of the week, it's really going to be an important line in the sand for the Canadian dollar. Currently, as it currently stands, unless something seismic happens during the week, we cannot really see that 140 area is not going to get breached, and then that's going to open the door to potentially 142, 143, up to maybe 145 in the coming run up to Christmas. So the third trading week of October appears to be a relatively calm period on the economic calendar. There are no central banking events planned, and the much anticipated US inflation reports from September are in the books. That means slow, flat markets, right? Well, not so fast. Complacency frequently leads to losses, so be sure to stay vigilant as the week unfolds. Right now, we are in a supercharged financial market cycle. Opportunity will be afoot as the world's institutional and retail players price the rapidly evolving global economic, policy, and geopolitical landscapes. As always, you can get complete coverage of each session's key market movers live in the trading room. Until then, trade well, and we'll see you in the next live stream.